Yes, I know a lot of people are worried about all the AI hype, as we're looking to the future, especially with embodied AI, which is all about robotaxis and transforming the world of transportation completely, and then healthcare, which is probably one of the most profound applications of AI. We think that this investment will pay off, and I think the chaser is going to be humanoid robots. And I think that is going to be the biggest of all the embodied AI opportunities.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Cathie Wood says, I do not believe AI is in a bubble. We'll explore why she thinks that and her bold market insights. Stay tuned.
Yes, well, if we're right and the growth continues to accelerate in this space, we think that the that the valuations will make sense longer term. So you really do have to have a longer term time horizon, which we do. We have a 5-year investment time horizon. I'm not saying there will never be any corrections. Of course there will, as many people worry, okay, is this too much too soon? But if our expectations for AI, especially embodied AI in the way that I just described, are correct, we are at the very beginning of, a technology revolution.
Is AI in a bubble right now?
I do not believe AI is in a bubble. What I do think is on the enterprise side, it is going to take a while for large corporations to prepare themselves to transform. It's going to take a company like Palantir going into the largest enterprises and really restructuring them in order to really capitalize on the productivity gains that we think are going to be unleashed by AI. In the consumer space, the consumer loves all of this, and I think we're all looking forward to our personal assistants doing our shopping for us. Well, I am. As I talk to people around the world, some people love shopping, so they may not. But I am really excited about not just shopping, but how much my productivity as an individual is going to increase with AI. It already has in terms of research.
Mt. Gox, the once dominant crypto exchange that collapsed a decade ago, has once again delayed its $4 billion Bitcoin repayments to creditors, pushing the new deadline to October 2026. Surprisingly, what many feared would be a bearish shock for Bitcoin has instead fueled optimism. Since the first round of repayments began in mid-2024, Bitcoin's price has surged nearly 85%, showing that fears of a massive sell-off were largely overblown. The market's depth and growing institutional demand have easily absorbed the redistributed coins, proving Bitcoin's resilience and maturity. So far, about 75% of Mt. Gox Bitcoin reserves have already been returned. But instead of crashing, BTC continued to climb. That's because buyers from U.S. spot Bitcoin ETFs to large corporations are scooping up BTC faster than it's being sold. For instance, MicroStrategy alone has added over 414,000 BTC to its balance sheet since July, a staggering number compared to the total amount released by Mt. Gox. On the macro front, rate cuts, renewed trade optimism, and rising global liquidity are forming a powerful tailwind for Bitcoin's next leg up. Analysts now project BTC could reach $150,000 by year-end, and even $500,000 by 2026 if liquidity continues to expand.
Let's just stress test this point, because you said that AI is not in a bubble, but you also flagged that there could be a correction risk. What's the timeline on that correction then, if you were to gaze into your crystal ball?
I think we're going to reach a moment in the next year where the conversation will shift from lower interest rates to rising rates, but it will be for a good reason. We think that the economy, the U.S. and the rest of the world, of course, will participate, is going to move into a productivity-driven boom just in time for our midterm elections. So I think when interest rates reverse, there will be a shudder because there are a lot of people out there, and we saw this during COVID and its aftermath, who think that innovation and interest rates are inversely correlated. That is not true over history. Even in 2017, when interest rates went up, we had phenomenal performance. So I want to disabuse people of that notion, but nonetheless, the way algorithms work these days, we think that there will be a reality check, shall we say. Well, one of the things we have focused on consistently is really, this is going to sound almost silly, but we're focused on the future and pure plays in the innovation space around robotics, energy storage, AI, blockchain technology, and especially multi-omic sequencing in the healthcare space. I think that's the most underestimated and underappreciated. So those are our 5 main areas. They involve 15 technologies, and we think they're converging to create really explosive growth opportunities. During the 4 years prior to this administration, we were facing increasing regulation, a massive increase in interest rates, supply chain shocks, all of which impacted unit growth. And unit growth really drives innovation. And the faster units grow, the faster costs decline. And so we're through that. And more important, in this administration, we have with OB3, the One Big Beautiful Bill, massive tax changes that are going to take the effective corporate tax rate in the United States down to what we believe is 10%. Statutory will still be 21%, but with the accelerated depreciation, massive accelerated depreciation in manufacturing structures, equipment, domestic R&D, and software, we think that that is going to turbocharge innovation in a way that people do not appreciate right now. And that is one of the reasons we do believe we're moving into next year. We'll see this idea of a productivity-led boom in activity.
Robert Kiyosaki, the famous author of Rich Dad, Poor Dad, is once again making headlines with his bold Bitcoin prediction. He believes the world's top cryptocurrency will double in price this year, potentially reaching the impressive $200,000 mark before the year ends. Sharing his thoughts on social media, Kiyosaki said, "I think Bitcoin will double in price this year, possibly a high of $200K, sparking excitement among crypto enthusiasts and investors who see him as a longtime Bitcoin advocate." Currently, Bitcoin is trading around $113,000 according to CoinGecko, meaning Kiyosaki expects another massive rally in the months ahead. However, not everyone shares his optimism. Data from Polymarket shows that traders assign just a 2% chance of Bitcoin hitting $200,000 this year and only a 14% chance of it reaching $150,000. Despite the skepticism, Kiyosaki remains firm in his belief that Bitcoin is the future of money and a powerful hedge against inflation. Even though October ended with Bitcoin down more than 10% from its record high, Kiyosaki's prediction keeps the bullish stream alive for many investors. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time.